Welcome to Buy, Hold, Sell. My name is Matthew Kidman, and today we are talking yield. Everyone loves it. And to discuss some yield plays with Ben Clark from TMS Capital, B1, Ben Rundle from NAOS Asset Management, B2. Let's start with you, B2, Automotive Holdings, car dealership group, good yield, not too bad a growth either.
Yeah, look, I think it's probably a hold for the time being. New car sales have been pretty soft. They have managed to do well under those conditions, but I don't know if that's sustainable. The other thing is the dollar's working against them. If you're buying cars from overseas and in a weakening Australian dollar environment, it's very hard to push that through to the consumer. So I think that's another headwind for them. I won't put a sell on it. It has come down a long way. I'll stick with hold for the time being. They may. You've got AP Eagers on the register there. Maybe they do something. So hold for the time being.
It's got a little bit of corporate appeal as well. So does that stand up along with the yield as a buy?
They've been very patient, AP Eagers, so I wouldn't be thinking it's going to happen tomorrow. But I think it's probably a buy now, Matthew. It's on about 12.5 times forward earnings. It grows sort of mid to high single-digit earnings growth. If they can make a couple of bolt-on acquisitions, might be a bit better than that. And I agree with what Ben's saying, but the other good thing that is good for them is interest rates will stay low for a considerable period, and financing for new cars is going to continue to be very cheap, which will hopefully see people recycle. So I'd be buy.
A buy. Okay, let's get into the leisure industry. Let's have a bit of fun. Ardent Leisure. Got exposure to the US, got good Australian assets, got a good yield. Buy, hold, or sell.
Yeah, I actually visited their main event centres in Texas, and they're unbelievable. The US consumer's in a great spot, and they've really got a good product offering over there, and that's powering the business. But I think the Australian assets are good as well. Inbound tourism should pick up, and a lot of those assets will come in for high levels of usage. So I'd be a buy.
Yep. What do you think?
Yeah,
Ben?
look, I think it's a buy. I'd like to see them do something in terms of Australia. It's a tale of two businesses with Ardent. You've got the high growth business in the US, as Ben mentioned, and then Australia. Maybe the growth picks up, but they're still fairly low growth assets in my opinion. So if they sold one of those assets and redeployed that capital into the US, I think the stock would re-rate significantly. I think there's probably a risk that they do something like that. So it's a buy for me. Yeah.
Terrific. Okay, let's go to consumer spending. We've got Breville. Once again, it's a company split between Australia and the US. Buy, hold, or sell?
I'm going to put a sell on Breville, which might be against consensus, but they've got negative earnings momentum. I don't really like the business itself. I think you're probably losing the fully franked dividend reasonably soon. So, the only thing I'll say is that the directors have been buying a lot of stock lately, so they clearly know something that I don't know, but I'm happy to stick with a sell for the time being.
You like the Breville story?
Not particularly. I like the international growth story, but it's still a relatively small part of the business. And locally, you're seeing margins come under pressure, market share come under pressure, and new entrants through places like Audi. And a new CEO has just come in as well. Wait and see where the strategy takes there. So I'd be a sell.
So, okay. Have you got a gem for us that is yielding quite strongly and got some good growth on the share price as well?
Yeah, it's not gem. It's not yielding as strongly as you might hope. Invercare's on a yield of about 5% at the moment, including franking. But what I like about it is the dividend growth that it's going to have over coming years. It's the leading player in the funeral and crematoria market. And this is a market that almost has guaranteed growth locked in. In 2030, there'll be about 215,000 people pass away in Australia.
Yep.
It's about 145,000 this year, and it's just going to keep rising from there right out till 2050. It's a long way out, but they'll be able to push through price increases, bolt-on acquisitions. They've got high operating leverage on their balance sheet. And with that growth locked in as the number one player, I think the dividend growth will be very strong if you're a long-term holder. And it's had a pretty decent pullback recently, so I'd be a buyer at these prices.
So 5% sounds pretty sexy for a funeral parlour, so I wouldn't give that away too quickly. B2, you got something for us that is going to give us good yield, but also a bit of spice on the price side as well.
Yeah, look, I think ADELAIDE, BRIGHTON cement, there's a lot of, they're leveraged to all sectors of the construction industry, which is one of the only industries at the moment in Australia that's got a tailwind behind it. There's a lot of infrastructure projects going on which will require a lot of concrete. And they've just sold some property as well, so they paid a special recently. I think there's probably a chance they pay another special at the end of the year, so there's maybe some dividend upside from in that respect. So I think it looks pretty good here. I'd buy ADELAIDE, BRIGHTON.
Well, there you go. Yield is not everything. Be careful what you buy, but there is some gems there.